Claiming house rent allowance or HRA for rent paid to parents or other relatives is common among salaried employees under the old tax regime. That practice remains legal. However, draft provisions under the proposed Income Tax Act 2025 may tighten disclosure norms, according to some reports. If implemented, taxpayers who pay more than 1 lakh rupees in annual rent may need to disclose their relationship with the landlord in a prescribed form. Along with the relationship, details such as the landlord's name, address and PAN number would also be needed to be reported. Earlier scrutiny focused mainly on rent receipts and PAN details in the higher value cases. The new layer, remember, would make the nature of the relationship a reportable item. The objective is greater transparency. Tax authorities increasingly rely on data analytics. Once relationships are disclosed, systems can cross-check whether rent paid by one taxpayer is properly declared as rental income by the recipient. Banking trails, property records and tax filings can all be matched digitally. This could reduce false or inflated HRA claims. Importantly, the draft rules do not ban paying rent to family members. Genuine arrangements remain valid. To safely claim HRA in such cases, a few conditions should be met. There must be a proper rental agreement. Rent should be transferred through banking channels, not in cash. The landlord must report the rental income in their own tax return. Failure to disclose required information could invite penalties. If non-disclosure is treated as misreporting of income, penalties under the new law may be significant, potentially up by 200% of the tax sought to be evaded. For honest taxpayers, the message is simple: maintain documentation, ensure transparent transactions, report accurately. If the arrangement is real and fully disclosed, claiming HRA for rent paid to a relative should remain straightforward.